Welcome back to Primary Source China Investment. This week, peng.guo and I are on show K4, and the title this week is China Wants You Back. So you can choose whatever metaphor you like, green shoots or turning a page or stream of news, but there's absolutely an attempt by the Chinese regulators to entice foreign investment back into China, while simultaneously making it more difficult to actually operate on the mainland. So from the headlines, we see JP Morgan, Standard Chartered, Fidelity, Neuberger Berman all recently moved up their ownership, either to full ownership or majority ownership, or they've been granted new licenses in the industry to launch more product. Another industry that's gotten a lot of news recently is technology/gaming. Beijing approved 88 video game licenses after almost 18 months of rigid curbs. So this is a common playbook. Licensing in China has followed a revolving pattern of loosening and tightening for the last 2 decades. So peng.guo, you mentioned this a week or so ago, and I wanted to throw it back to you to see what's your thoughts about what the Beijing policy is doing right now.
Yes, I think all the policy maker is still based on the economic situations as well as their expectation to do it. So that definitely they have some policy cycle. Sometimes they get tied, sometimes they get loose. I think it is quite normal. Like the Federal Reserve, they want to raise the interest rate or reduce the interest rate. I think right now is really due to the 3 years COVID, and so the economy is pretty bad, and plus the big real estate industry get broken down. In such hard situations, definitely the government will take the loose policy and also encourage like the company, individual, whatever they can do to improve the economy.
But is that across the board? Do you think this will affect, hospitality industry or healthcare industry, all industries?
I don't know other industry, so but for the financial industry, definitely I see this is a great signal for the companies to expand or acquire the license. Because we know the financial is a highly regulated industry, so it's very important to get the license as well as the approval to do business. I know like some of companies maybe wait for a couple of years and not get it, quite frustrated. Yeah, unfortunately, timing is important in this market.
I do look at a lot of these financial companies and say, what is your strategy for going into China? Because as we've talked about on the show a lot, there is a ton of competition. So the idea of you setting up your own asset management company, your own securities firm, your own advisory firm, that is going to take a ton of time, money, resources on the ground in China and building that up over a very long period of time. I will say this is asset intensive just to get into the businesses. So I do think there is a reevaluation of strategy going on with a lot of these companies.
For individual company, it would be hard, especially for the foreign company.
Right.
Because in China, you really not just do business and bring whatever you experience to that market. You more like the recreate your business in that market.
That's a great point. peng.guo, that's a great point. So you have to recreate your business in that market. You cannot just cut and paste what you've been doing somewhere else.
Exactly. Yeah, that's the why it gets so difficult.
So the other thing that's happening alongside this regulatory, renewal is we're seeing a ton of news about the reopening of China and how savings are at an all-time high and how that might affect the consumer on the ground in terms of revenge spending. So all of this has to go into the strategic calculus of what foreign firms operating on the ground are going to do. And for this show, how do we navigate the investment allocation to China given what's happening? So a few shows ago, you highlighted the travel industry. And while there isn't a clean ETF for that, there are some names such as TCOM, that's C-Trip in the US, some big Chinese hotel names like Jinjiang or BTG. And there's also the airlines, China Southern, Air China, China Eastern, and if you're really aggressive, maybe Spring. There's also some leisure names, such as the well-known China Tourism Group, 37 Interactive, and maybe Wanda Film. So there's a ton of names that are out there that you can access via Stock Connect. And finally, we want to talk about consumer staples. And our favorite name on this show is Moutai. So the number one name in consumer staples is Moutai. And if you go pull a chart of Moutai, I don't think there's a bad time to invest in Moutai.
Yeah.
Go ahead.
Yeah, I think right now people it's almost after the Chinese New Year, so people get very excited and to start the work. So at here, I would really want to highlight a few points. Number one, China is still the engine of the entire world economy. So there's no doubt with that. And China's policy, peace, and development, that is still the same. And also for all the industry, and you cannot use the traditional ways to think about it. And China really recreate and integrate with many different industries. Which means if you use the traditional way, just simply organize some of company to understand what they're doing, that's probably wrong. And also the business model integration as well as with new technology, new energy, a lot of things get changed. So right now, it really need to go deep to think about it, at least at the sector level, to at least figure out what company should be included in this sector. You cannot just simply use the MSCI GICS or FTSE ICB and you done the job. No, that's not work like that way.
It's always been complicated and getting more complicated, I would say. And just a final point on that, these broad-based ETFs that we talk about a lot on this show. Remember, China Tech, took off very quickly in the beginning of the year, but ASHR, the CSI 300, has almost caught up with KWEB and MCHI. And we've talked about the risk-adjusted returns of tech, which is horrible. So, the broad market index has basically caught technology on the mainland year to date. So with that,
I just want to add one more point. The China market is already reacted. I think the lowest point is November 1st. So that means the market is reacted to the growth for 3 months. And for the 3 months in the Hong Kong market, it almost increased 50%. So I know this is terrible to get dropped in the last year. That's definitely not a normal situation, but the bounce back is also be quick. The only bad thing is the volatility is very horrible.
Yeah. So
when you have how you control it, that's the difficulty.
Yeah. So I think the investors are looking for what's next, because a lot of the reopening is now already priced in. So people are going to be looking at what's next.
Yeah, that definitely find the sector and the long-term growth. That would be the key. In my opinion, I think the new energy as well as electricity-based new energy technology expand in all areas and should be bring in another growth in the long term in many sectors, not just one.
And we'll put those names up when we edit the video. So with that, we're going to leave it here for show K4. Thanks for tuning in. Happy New Year to everybody, and we'll see you next week.
Thank you.